Now, global markets are bracing for further escalation after Trump's 48-hour deadline ends on April 6th. Energy prices have surged sharply since the conflict began. Crude oil has risen between 40 to 65%, now trading well above the $100 per barrel mark, while LNG prices have jumped nearly 60%. European gas prices are also up over 70% from pre-war levels. Markets are already under stress, but they are still pricing in a contained conflict, not a full-scale escalation. Three critical triggers are driving the global price surge. First, the oil and energy shock. Disruptions in the Gulf region, combined with attacks on key infrastructure and tightening crude and LNG supplies. This directly feeds into transportation, manufacturing, and inflation globally. Now, second, the power and industrial energy shock. Rising energy prices are pushing up electricity costs, especially in energy importing regions across Europe and Asia. This is also impacting industrial production, including petrochemicals, plastics, and even semiconductor supply chains. Third, the food and industrial supply chain shock. Higher diesel and fertilizer costs are beginning to feed into agriculture, while the impact on food prices is still lagging. It is expected to build over the coming weeks. These interconnected triggers are creating a broad-based cost escalation across the global economy. The real inflection point comes after the April 6th deadline. If the conflict remains contained, oil prices are likely to stay elevated in the $100 to $115 range, with supply chains strained but still functioning. However, if the United States escalates, particularly with strikes on Iran's power grid, the impact could be far more severe. In that scenario, oil prices could rise to $120 to $150 per barrel. LNG and gas prices could surge another 30 to 50%, and power costs could climb sharply. Food prices and industrial costs would follow with a lag, potentially rising 10 to 30% over the next few months. The broader risk is a transition from a price shock to a full supply chain disruption, with implications for global inflation, growth, and trade flows.